thunderstorm-filled Bethesda, Maryland. I hope everyone is well. It's great to see everyone again. It's great that we have a full house of board members and TAs who are attending this meeting. Also, again, as you always, welcome to our PIOB observer, Karen Stothers, and our official observers, Jim Jelk and Yosh Matsumoto. It's really great to also have our partners in standard setting here on the call. We have a number of IAASB colleagues, Chair Stavros, Richard Fleck, the Deputy Chair of IAASB, the Chair of the PI Task Force, Mike Ashley, as well as many IAASB staff. I think this is another sign how closely the two boards are working together. And so that's great indeed. As you know, the monitoring group recommendations came out, and continued urge for the two boards to work together is a key theme, and we'll obviously at some point have more opportunity to talk about the implications of the monitoring group's recommendations. I also want to welcome, as always, our public observers to this call. We're now, as you know, YouTube stars. I assume I haven't checked. I'm sure that we have about 1 million subscribers by this point, but if not, the few hundred that are listening, welcome to you as well. Recordings of the session, as usual, will be posted to our board web's meeting page as soon as the recording is available. So let's get quickly to business. Mike, as he said, only is here for the first hour and a half, and then Richard Fleck would take over to him if we're not finished with this discussion. But we're starting the session by focusing on IAASB's project to review the definition of the terms listed entity and public interest entity. And our goal is to provide feedback to inform their task force for their future deliberations on the project. The term listed entity is important in the context of our standards in that it is used to introduce differential requirements that are designed to apply to firms or auditors when auditing the financial statements of listed entities. Though the IAASB does not presently use the term public interest entity, our standards incorporate the concept of entities that may be of significant public interest. We recognize that the public interest importance of having consistency at a global level in this regard, including alignment to the fullest extent practical between our standards and the IAASB code, so that these standards together could be applied effectively. From a coordination perspective, the aim of all of this is to establish agreement between our two boards on a common revised definition of the term listed entity, and to develop a pathway for convergence between the definition of PI in the code and the description of entities of significant public interest in our standards. Mike, I think with that, or Vili, I wanted you to maybe give a little bit of sense of the coordination of the project and that's underway, and then maybe just hand it over directly to Mike so we can get into the presentation.
Okay, good. Thank you, Tom. And as you've indicated in your opening comments, certainly a project that is of great importance for both boards, although it is specifically an ethics board project, it is important to our board as well. And for that reason, we have actually been coordinating very closely on this project from the inception of the project, where our planning committee provided feedback on the project proposal. We've got two correspondent members, Fiona Campbell and Josephine Jackson, that are correspondent members to the Ethics Board task force. And we have had numerous engagements since the beginning of this year at staff level. We had a joint IAASB National Standard Setting session on May 11. That was preceded by our planning committee on May 4th, also discussing the first round of issues and proposals from the task force. We have, Josephine and myself, joined our IAASB colleagues on a call on May 29 with IFIAR. And that is also why today's session is of particular significance, because it's a continuation of this coordination regarding this project and the first opportunity for our full board to actually provide feedback on the issues and the proposals. So I just wanted to highlight that there has been a strong level of coordination throughout, and obviously plans for that to continue through Q3 and Q4. So I think with that, Mike, I'll turn over to you.
Thanks, Willie, and thanks for the input that we've received from IAASB so far. I'm looking forward to receiving some more today. Jeff is in charge of the slides, so occasionally I will say thank you, like that. Go back to that one, Jeff. The second slide. Go back. There we go. So I don't propose, because I think the slides have been sent around to everyone, to talk too much on the background. I think I'm going to take that as read in the interest of time, if that's all right. As has already been outlined, the objective of this session is to discuss the issues related to the PI project, and in particular provide feedback on our initial views and preliminary drafts of the direction of travel we're going in. And we've split that up into, and the two that I'll talk most about are the overarching objective and public interest entity. We also got a little bit on other matters. But as I say, I wasn't going to dwell on the background. What I would like to do, Jeff, if you can switch all the way through to slide 9, is start really with the overarching objective. And one of the things that the task force decided very early on is it would be helpful to think about what it is we are trying to achieve in terms of setting either additional independence requirements or additional, what I'll regard as quality control type requirements in the auditing standards. And we felt it was important for 3 reasons. 1, it would inform the approach. 2, it would enable us to test the proposals against that objective when we considered them. And as and when we approved the final promulgation, it would hopefully inform the decisions of local bodies and firms. So we decided, as I said, that was an important first step. And when we thought about it, if you can flip on one slide, Jeff, we felt that it broke down into, there was significant public interest in, let's say, the financial condition of certain entities. And I think it's important that we focus on the financial condition, because that is the subject that is audited, if I can put it like that. We have had some discussion around, for example, ESG, and I'll welcome comments on that when we get to it. But the initial approach has been to focus very much on financial statements and financial condition, because that is the subject that the auditors get involved with. We did start off initially by just saying it was the financial statements. We were challenged that actually it was broader than that, and it wasn't just financial statements. We don't want to be accused of just focusing on those, but it is financial condition. It's not, if you like, the health and safety standards being adopted in a hospital is not what prompts the public interest in their accounts. So we started with, let's say, significant public interest financial condition. We then say public confidence in the financial statements in that context is therefore important. And confidence in the audits will in turn enhance public confidence in the financial statements. So what this drives you down the road of is saying those additional requirements that we might look at are designed to enhance confidence in the audits, which will in turn enhance confidence in the financial statements. That's the sort of thought process that we went through. So if you can flip on, Jeff, and again, I think it's important, and I think it's very important that this is something that this board is behind, and I feel very strongly about. I don't believe that if you've got a definition of a PI right, it shouldn't be just a question of enhancing the independence standards or having different independence requirements applied to it, if you're not also applying differing requirements in respect of the auditing standards. Because if the overall objective is to enhance confidence in the audit and hence confidence in the financial statements, you only do that if you've got the two in combination. I think that is why the PIOB, as we noted in the background that I skipped over, does strongly support alignment between the two boards. And I think it's why some regulators have already gone down that path. You look at the EU audit regulation, for example, for their definition of PIs, they have both enhanced requirements for independence and enhanced requirements for audit. And at that point, I really just wanted to pause and get any feedback, both on the idea of having an overarching objective, whether you feel the overarching objective is actually expressed reasonably, and if you agree that the same overarching objective should support the application of disciplinary requirements for both boards. Because unless, if you like, there is agreement around that, I'm not sure there's much point in having a combined definition of pi. So we go back to square one and think again about how we go about it. So I think this is the bedrock of saying, why do we need a combined definition? So I'd like to just pass over to your board members, Tom, just for any immediate reaction to that.
Okay, so I think if you look, that's highlighted in our agenda paper 8A, beginning it's on page 4. So reactions to the objective as described by Mike on behalf of the task force. Any hands?
I will say, by the way, Tom, that I tend to take silence as acquiescence.
Yeah, Roger.
Well, then you probably don't need me to talk, because I I agree entirely. I think it's very difficult to justify and explain why you are seeing a difference between the two sets of standards between PIEs and listed. So very much agree with the overall arching objectives and what we're trying to achieve.
Thank you, Roger. Julie.
On same place, Tom. I mean, we're going to get to some other questions and hopefully some further discussion on some of those finer points, but definitely agree with the overarching objective that's been put forward.
Sue?
Yeah, also in the same place, agree with the overarching objective. Consistency, I think, is important between the different sets of standards that that auditors apply.
Thank you. Rich?
Well, I always like to be the contrarian in the crowd. I do think it's a good goal to come up with the objective and try to get everyone moving together. But I also know where we've been for the last, at least in my term, 5.5 years. And I do find it hard to see how we can really move things together. I understood what Mike was saying about the goal to move things together and that regulators are already moved on this. Well, you know, I'm fine with that. In a particular market, regulators can move. But you know, when they get down to the specifics of what was presented, you know, part of it was talking about just the significant public interest in the financial statements of PI entities. And I read that and said, well, okay, that sounds good, but are all public interest entities the same? And will all public interest entities have a significant public interest in them? And so I start finding my way again, and which is what, as an auditor, you do to try to apply these rules is, well, are we trying to get to all pies in the you know, when we get to the broad listing of items, categories, or are we trying to get to significant public interest? Because I could see a difference between the two. I understand the desire was trying to bring the two together, and that would hopefully merge the two easier between the IAASB and IAASB. But I actually thought that the significant public interest in adding that in actually caused me more concern. And again, if you think about what all the problems we had when we went to ISQM2 of trying to bring in something like PI, then we went to something significant public interest. Again, I think you know, it's not that easy to figure out where you want to be on which entities for this to be applied to. The other issue, and again, I'm glad Mike raised it, question about the financial condition. Again, I read that and was troubled by seeing, well, is it the financial condition that we're looking at? In the end, the audited statement talks about the position, financial position and performance. And again, people might have a different way of looking at financial condition. Not sure, but I think I'd probably be closer to where I think the task force originally started, which was the financial statements. At least an auditor can understand what he's putting things to. Financial condition starts taking it out of and bringing in a different sort of judgment in my mind. And I guess the last point I have is, looking at this and whether trying to bring this together is going to have a lot more concerns and difficulties in trying to make it easy for an auditor to understand which one these apply. Some of the language that we talked about in the statement was about that this expands the scope. I'm sorry, it should enhance the quality by doing this. In my mind, and those I talked to, it really it adds to additional safeguards. Those safeguards help the perception of audit quality or independence. But if we use that same type of language, and what does it say about all the other financial statements that are done? That they are less audit quality in those financial statements, in those audits? I'm not sure that that's the message we want to leave to the rest of the financial statements that we work on. So, Tom, I know that different than others, but I did have a lot of pushback on this first question when we were talking within my firm. Thanks.
Thanks, Rich. We'll see where others break on this. Kai, Uwe?
Thanks, Tom, and good afternoon from Germany. I have a short feedback. Firstly, to the first question, I agree with the idea of an overarching objective for additional requirements. And my feedback to the second question is, while having the same overarching objective may be desirable, the objectives of the different boards might be slightly different. For this reason, I would strive to have the same objectives, but if they are not exactly the same, this would not be an issue as long as the objectives are compatible. Thanks, Tom.
Thank you, Kai. Imran?
Good afternoon, and it's great to see everyone again after such a long time. I've got 3 or 4 comments to make. Firstly, really grateful for this opportunity to interface on this very important topic. We're really supportive of the project, generally with the approach, and we all recognize the genesis of this project. And this project has a difficult start, but it does not mean that we should not do it, and we should not continue to find ways to solve the issues that Mike has put before us. Mike, I have perhaps 2 substantive points. One is in relation to this topic of financial condition. Can you tell me what then is the implication of what is included and excluded by the use of these terms? So Rich suggested financial statements as the alternative. I guess I wasn't able to draw clearly yet from this proposal what's the implication of the use of the words financial condition, for the reasons that Rich has stated, plus other reasons. I think that your other crucial proposal, and so this is my last point, that the concept of a PI relates not only to independence, but also to enhanced requirements for audit. I strongly agree with that. I think what has happened here, though, is that the market has moved on to use this definition of PI on a range of things beyond for that which it was originally designed. And the thinking then of the task force is really reflecting where the market has moved to. So supportive of that thinking. Thank you very much.
Thank you, Imran. Isabel?
Yes, hello everybody. I wasn't sure if I was going to make this point, but now thanks to the 2 previous speakers, I will do. Financial condition was not very clear to me. When we try to translate it, at least in French, people will immediately think at going concern. Seeing financial conditions seems closely linked to the question whether the entity is in a going concern situation. And I'm sure that's not what we mean, but I'm sure there will be misunderstanding around this concept of financial condition. Thank you.
Thank you, Isabel. Eric?
Thanks, Tom. Yeah, I'm supportive of the overall objective of consistency across the two boards in developing these requirements. I think it will hopefully remove confusion, but I do have a couple of comments. I think, like others, the financial condition is not a term that was very familiar to me, so I'm not sure what that really means. And similar to some of the comments that Rich made, I'm just worried about the potential for suggesting that audits that are of non-PIs are somehow of different quality than audits of PIs. So it's just a case of some of the wording throughout that may need to be tweaked. Thank you.
Thank you, Eric. Fernando?
Thanks, Tom. Hello, everyone. Just to express that the feedback I got was very positive for the project and the objective. A few suggestions to clarify terms, but also looking forward to clarify confusion that we usually suffer in practice. Thanks.
Thank you. Bob?
Yeah, thanks, Tom. And just to pick up, I do support the overarching objective, but I guess an observation and a concern. Concern around, I think what's been expressed, kind of do audits of non-PIs then, is that a lower quality or a different type of audit? And I think it really revolves around reasonable assurance when the standards are more stringent. What does reasonable assurance mean? So that would be a concern. Just an observation, I guess, is while I agree with the overarching objective and where we're going, I think we should acknowledge that confidence in the audit of public interest entities really is derived from the auditor's performance against the standards. So while enhancing the standards with requirements for audits of public interest entities is a piece of that puzzle, it also comes down to auditor performance against those standards. So some of the oversight and regulation plays into that too. So I guess my observation is that simply adding or strengthening requirements doesn't necessarily result in confidence from the public perception. Thanks.
Thank you. Kai Morton?
Thank you. Supporting over the overarching objectives, but as others have expressed, concerned on the use of financial condition, where this should apply.
Let me just repeat that because you were very faint from an audio perspective. You general support for the approach, but echo some of the issues that others have raised. Is that my understanding of what you said, Kai?
That is correct.
Thank you. Lynn?
I generally support the objective, and I just want to echo the same comments made by Rich, Eric, and Bob around the sense of two tiers of quality. Thank you.
Thanks. Any other? Anyone else want to intervene here? Otherwise, I'll sum up. So, Mike, I think you got a broad sense of support for the direction that the task force is heading, and some concern, particularly around this tiering of quality between those who scoped in as public interest entity and others, and what the perceptions would be around that. Some admonition about that maybe there needs to be some flexibility, that in principle people like that we're aligned, but there may be instances where there's some divergence in practice. But in general, support. I think others alluded to that there are wording issues that they could submit, that people may submit. I encourage that to be done offline as well. Like I had a general question about whether the words taking on financial obligations to the public makes much sense, but I think we should provide the drafting issues offline and for task force consideration. But I hope that gives you a fair summary of what you heard.
Thanks, Tom. And I'll respond a little bit, if I may, and perhaps just sort of push back a little bit, because my first comment is in terms of financial condition, as I tried to articulate probably badly, all that is really trying to do is to narrow it to there isn't a public interest in the entity for some reason which isn't connected with what the auditor is involved with. So, as I say, we get a number of comments about, well, you should include all hospitals. And you say, well, why? And you start boiling it down, and actually the public interest in the running of a hospital is, depending on how it's funded and depending upon if it's the only hospital in town, what happens if it goes bust. But generally speaking, it's nothing to do with the financial condition, and hence the financial statements, and therefore nothing really to do with the audit. So why would you put additional requirements around either the independent standards or the auditing standards just because there is a public interest for something which has got no connection with the audit? So that's all it was designed to do. If it's causing too much grief, we can go back to financial statements, although I shall no doubt get beaten up by Mr. Fleck, who was the person who accused me of being too narrow-minded when I started with that point. But we can look at that. I suppose I don't regard that as a big deal. If it's causing confusion, we can look at different ways of trying to address that. All it was trying to do was say it's not some general public interest. I understand the concern about 2 tiers of audit, but I'm presuming that applies in your existing standards, in the sense of if there is a concern, it's there, because you do have additional requirements. And additional requirements currently that are only for listed entities, but then you have to say, well, what's so special about listed entities that means you have these additional requirements? And I would hope, if you try and dig behind that, it's because you are trying to enhance confidence in their audits. And that's all this is saying. So I would hope if we've got this objective right, and the objective of both boards is that there is a class of entity where we wish to have enhanced confidence in the audit, then the standards should do whatever is necessary, be they auditing standards or independent standards, to drive towards that objective. And if they're not driving towards that objective, they're not doing the right thing. And if they are driving towards that objective, and that is, if you like, the basis of those requirements, you've already got the issue of how do you dispel this feeling that there's 2 qualities of audit. And I personally don't think there's 2 qualities of independence either. You're required to be independent. This is all about enhancing the confidence that independence requirements are indeed being met. And in the same way, I suppose that the auditing standards are being met. It's a confidence enhancer. It's not a change the baseline requirement. So I would be keen to try and cement that one, because as I say, I'm not seeking here to say what are the changes in the auditing standards that you might wish to put into place to meet this overarching objective. What I am saying is this a valid overarching objective? And then over to you, that assuming we've got the class of entities right, what would you do to enhance the confidence in the audits? Does that make sense?
I see Rich would like to come in.
Mike, I think it is the words being used, I think is the concern that was raised in the perceived that we're saying the audit is enhanced by doing this. I believe you use the word confidence. I think people's confidence that certain steps have been done because there's oversight is helpful, but I don't think in and of itself the audit quality is enhanced. Okay. I think a perception that might be the case because the way people look at it. But so I think, I forget, maybe it was Eric, but I think it's just potentially just changing the words around it enhances the audit quality, because I don't think it does. It gives different.
I'm not conscious I used that, and if I did, I apologize, because it wasn't designed to be, it's not designed to be that. It is designed to enhance confidence. That comes back to the way we frame the objective is to enhance confidence. So if I don't think there's a lot of distance between us then, if that's the case.
Okay, thanks, Mike.
And I actually found the emphasis on confidence is the thing that gets me over the line on this topic. So maybe it is a question of wording, like, that we don't need that much further discussion on this topic, and we'll see it in the next iteration to see whether that addresses the slight concern that exists, not just among Rich, but a few of your members.
Okay.
Should we move on?
We can move on. Next slide. So taking that as the overarching objective, we then started to think about what are the sorts of criteria that we would look at in determining whether or not there was significant public interest. And this was our first stab, if you like, at trying to discuss that. As I said there, it's not about having a different level of independence. It is, the focus is on financial condition, as part 4A is all about audit. We'll leave aside whether that's the right words, but that's what we were focused on. And it's not a focus on other issues. We were trying to think what drove that level of public interest. And we have tried to broaden it, as we say there, to not just pick up the financial sector, which is the thing that you obviously tend to home in on quite quickly. And the idea was to be potentially broader than that. But at the same time, when you then start applying it, you do start actually picking up an awful lot of financial sector because of the way that some of this actually works. So that was our initial proposals. If you want to keep going, Jeff. So it's a non-exhaustive list of factors. It's been drawn, as it says there, from 400.8. That, in terms of the discussions we've had at the IAASB board, I would just draw out one or two things. Bullet 3, which talks about the importance of the entities, the markets in which it operates, is really, I suppose, driving at its replacement, the ease of replacing it. If it is a sole provider or an almost monopoly provider in a particular market, and it would be very difficult to substitute it for something else if it fell over, that would, in my view, it would help drive a potential public interest in that entity and its financial condition. Obviously, you've got the number and nature of stakeholders, so that is more directly the stakeholders who are interested in at a particular point in time. And then the last one was slightly different from bullet 3. It's more the systemic impact it would have on other entities, potentially in other markets. So, for example, if it's an integral part of the infrastructure of a particular market, what would happen to it, again, if there was a problem in terms of its finances? So those were the sort of basic ones that we came up with. You flip on, Jeff. Comments we got back from our board in June, they were basically, as I say, supporting the overarching objective. They felt there was a question about whether the list of factors should cover impacts and size of the whole, e.g. ESG criteria. As I say, I think we will look at that. But part of my issue, that is, until we've clearly articulated the role of auditors in relation to ESG reporting, it's kind of hard to discuss requirements you apply to auditors who are engaged in ESG reporting. So I think it might be a bit chicken and egg here. There was this question about market infrastructure entities, stock exchange, commodity exchanges, that sort of thing. We will look at potentially, do these sorts of criteria capture those? There was a question of whether actually part of the bullet 5 should be part of the overarching objective as opposed to just one of the criteria. So we will give some thought to that. And it was accepted there's a need to distinguish between financial failure and operational failure. So one of the things I would like to then talk about is taking into account the overarching objective, taking into account how we've then articulated that in the context of trying to define what entities that would indeed capture. I'd be interested in your views on those, but the logical conclusion that we take the board to, our board to at that stage is, if that is right, then effectively what you are doing is substituting listed entities with pies. And I can see Rich shaking his head already. But the logic of the objective is these are requirements that should be applied to pies. If you're applying them only to listed entities, the question I would have for you is what makes a listed entity different from other pies to which this ought to apply? So again, I'd just be interested in comments at this stage.
Okay, thanks, Mike. Any comments, Isabel?
Yes, I will try to answer to that last difficult question. If we go in the IAASB and have a look at the additional requirements that we currently have for listed, and it was outlined in slide 6, I think, of the slide deck, it's mostly additional communication requirements. It's not additional work effort in the performance of the audit. And I see Willie shaking his head. At least that's my understanding. We have additional reporting requirement to who's charged with governance. And we have additional reporting requirements to the shareholders via the audit report. What we have in listed entities but we do not have in all the pies as defined by the ethics code is that you not necessarily have the same level of structuration of who's charged with governance. For example, in some of the pies that would be scoped in, you would have no audit committee. And then it would be very difficult, I believe, to implement the communication requirements to the audit committee if you don't have any audit committee. So that was my try to find a difference between both, and why I don't believe we should replace listed by pie, or at least we have to be very careful of potential unintended consequences.
So, Isabel, I now know Billy very well, and I guarantee you his nodding was an agreement, not a disagreement for you when you were speaking. Is that correct, Billy? Yeah, you see, we work very closely together. Kaiue.
Thanks, Tom. Again, I have two very brief comments. First, I'm in favor of the overarching objectives set forth in the paragraphs 400.8 and 400.9. However, I may need to give further consideration to whether the wording is appropriate in all respects. My second comment refers to the second question. As a matter of principle, I can foresee pies replacing listed entities in the IAASB. However, I would like to make the decision on a case-by-case basis for references to listed entities in the IAASB. Thanks, Tom.
Thanks, Kai. Julie?
Thanks, Tom. For the first question, I'm in general agreement with the overarching objectives as set out. There's probably some wording suggestions that we could provide, but overall supportive. I was somewhat challenged by the second question along the lines of where Isabel was describing the fact that a number of places in the IAASB is where we know requirements for listed entities are on communication requirements. And in particular, I stumbled over what the consequences might be to the auditor reporting ISAs. So I guess I don't have a firm, a concrete view yet because I haven't thought through all the consequences, but I do think that will be somewhat of a challenge. And I'll give you a little preview to one of my comments a little later. I think that unless there's a lot of consistency that can be driven with what is incorporated into the pie, particularly by regulators and by firms, I think that auditor reporting piece could become quite inconsistent depending on where firms or regulators land with the definition. And so I was thinking about that too in trying to decide whether I was in agreement or not. But for me, I think I still need to think through what the consequences would be to do a direct replacement of the two terms.
Maybe this is me, and it comes up based on the last couple of comments, but listed entities are still a subgroup of pies, and there could be some instances where you just apply things for listed entities and some things that you would have determined that it's applicable to all pies, and that would be inconsistent with driving convergence amongst our standards. Am I right on that? Maybe someone, or Billy or Mike could respond to that, and that may preempt some of our.
It's back to the overarching objective, I suppose, because if the overarching objective for all pies is to enhance confidence in the audit of the financial statements, then I think you would have to be clear about what distinguished listed entities from other pies in terms of those requirements, if that was the underlying objective behind setting those requirements. Does that make sense?
Yeah, it does make sense, but you could argue, like, there could be compelling reasons to argue that there's reasons for doing that.
Yeah.
You're not limiting that. You just say that you have to provide, based upon the objective, you have to provide a compelling case to do it, right?
Correct. And I suppose that I mean, if I look at the requirements, and I acknowledge that I think it's already been mentioned, a number of the requirements within the auditing standards are around communication with those charged with governance. The same is true of the independence standards. And at the moment, and we need to work on that between us, because some of those requirements, particularly around things like potentially NAS and fees, may actually interact with some of your requirements in places. So it would be unfortunate, I think, to say the least, if we had requirements which we were applying across the board to pies, which is the approach we have tended to take. There's very little within the auditing standards that actually applies only to listed entities. But basically, the definition of the audit client is about the only thing that, and that has knock-on consequences, but that's about the only thing that is different. Otherwise, most of our application material today and most of our requirements today apply to pies as a body, not listed entities as a body. And the rationale for that being, if there's public interest in something, we need to be enhancing the confidence in the same way as we would for listed entities more generally. If I understand the history correctly, and one of the reasons that the IAASB came up with SPs as opposed to using the IASB definition of pies, was a concern that it would have a disproportionate impact on things which were not really of public interest. And as I'll try and explain as we go through this, what I suppose we're trying to do with this project is to, in some ways, give more freedom to both boards to set the requirements at an appropriate level for things in which there is a legitimate public interest, but not for us necessarily to be completely definitive as to what those entities are, but to give more freedom to local jurisdictions to set that requirement based on their context and their understanding of the local markets, etc. So I understand the concern, and it's something that we will need to tackle, and I hear the comments are being made, but as I say, when it comes to those charged with governance, we already have a slight disconnect in the way that IASB and IAASB have tackled that to date.
Okay. Rich?
Similar, obviously, concerns that Isabel and Julie raised. And again, while I do agree we should try to bring these things together if we can. Having said that, as we went through at least the projects when I was on the board, but also I know where we were on the audit reporting, it wasn't like we centered on listed and only listed and did not consider whether you could go to PI, but the board decided that listed was the right level to go to. So maybe it's where Kaiua is, but I would want to look at each and every one and make a decision on each and every one as to whether or not it was right for that requirement to go to PI, or if it was just to stay at listed. I think it is, convergence would be great. Having said that, I also look at we audit financial statements in a variety of gaps, but one of the ones we do a lot is the IFRSs, and they use listed. So again, there's a tie to that side too, and we're going to get to a question. I guess we'll get to the question of boarding of listed entity and whether this applies to those in the process at a separate question. I thought that was going to be this question, but I guess we'll come to that later. Thanks, Tom.
Thank you. Josephine?
Hi, good afternoon, everyone from London. Mike, as you already know, I'm obviously in favour of the overall overarching objective, point one. On the second point, similar to Kai Martin, as a matter of principle, I can see PI replacing listed. We will have to think about going through the standards with a fine-tooth comb. But as you will know, Mike, in the UK, a lot of these requirements have already been enhanced to PI level by ISA pluses in the UK. So for us, it's really, we're really comfortable with this change. Thank you.
Thank you. Roger?
Yeah, Mike, I'm comfortable with the change too. The overarching objective, I agree that we have to be challenged as to whether these requirements which relate to PI should only relate to listed. So I think that's a good challenge. But the devil's also in the detail a little bit, and it depends on who's scoped into PIs, and it's also depending on things like the audit reporting requirements. So so it's all a little bit conditional at the moment, but I think this is the objective. We would really like to simplify this to get it to PIs. Thank you.
Thank you. Imran?
Yes, thank you. Two observations. The easy one first. I agree with the proposal, the substitution. I think, like others, our board would need to carefully consider all the implications, but this was the objective of what we were trying to achieve. And with Josephine and Fiona working closely with your team, Mike, I believe that we'll be able to get any gaps resolved. My observation, though, about what is described as paragraph 400.8, if I understand the approach the task force has taken, is that you've not tried to define it by function or by industry, but rather by its nature. So if Imran from Johannesburg comes along and he asks, what about a large charity? Or Kaiua comes along and says, what about the public sector? Your response would be, it doesn't matter which industry you look at. Your thinking is that because we've described it by nature, it would scope the relevant entities in from those industries. If I got you right, then I think the logical conclusion to that would be the application material that realizes that makes that true. Am I following your logic correctly, Mike?
You want me to respond directly to that, Tom? I think basically, yes. The first bullet does hint at nature of business. So, and I think, Tom, you said you weren't quite sure what we meant by financial obligations. And it's perhaps not a very good way of trying to capture the fact that if you have got a large number of public financial commitments, there tends to be a large public interest. So it tends to pick up insurers, it tends to pick up obviously banks. It can potentially pick up others. So, for example, one of the things that the pandemic has illustrated is that you can have large numbers of things like tour operators who, when they go bust and have taken all the money for the holidays, they never deliver. There's a problem. So, depending upon what the bailout sort of backup there is in particular countries, but that's the closest you get, Imran, to capturing particular sectors as opposed to it applying across the piece. But generally, you're right.
Thank you. Imran, do you need to come back on that? You're happy with the explanation? Okay, thank you. Eric?
Thanks, Tom. Again, supportive of the overarching objective. Not convinced yet that PI should replace listed entity in the ISAs. I actually, and supportive of the views of others that we would need to look at the requirements on a case-by-case basis. I think, to be honest, in Canada, where we have a large number of very, very small listed entities, using that definition of listed entities is not always the optimal solution. So I think it will challenge us to maybe revisit some of those requirements and whether, how specific we need to be in those as well. So I just wanted to make that comment. Thank you.
Okay. Any others? Any other hands? So as I read it, again, similar to like the first time first point was that there's general, in principle, support for the direction, but some concern if this was a blanket agreement at this time to accept the replacement of PIs for the listed entities. And the purpose of my discussion with Mike actually was to point out you could still be consistent because one is a direct subgroup of the other. But we'd have to think about the unintended consequences of the more you subset things out, the more opportunities for inconsistencies you bring. So partly I think it's because it's the first time we really had a deep discussion on this that people are still trying to get their heads around the implications of a blanket acceptance of the principle. But I see general sympathy for the direction of travel and some desire to think about unintended consequences and whether there weren't instances where there is a compelling reason to limit additional requirements to just the subset of listed entities. I think hopefully that's a fair description of where the board is conscious that some people have different variants of it. But is that what you heard, Mike?
Very much so, and don't get me wrong, I do think we've got challenges even within IAASB about if you got rid of the term listed entity and just replaced it with PIs throughout. As I say, there's only one place where we have a significant difference, which is around the definition of audit client, but that then has knock-on repercussions for quite a lot of how you deal with that. And certainly there are potentially practical issues with extending the definition of audit client that we currently have for listed to all PIs. And therefore we would have to be asking ourselves, would we keep it as a subset or would we do something different? And that is a separate debate as well. So I'm not looking for firm decisions at this stage. I'm comfortable that we have a direction of travel that people can understand and appreciate. And if you like, the end objective is what people might desire to achieve, but we need to prove we can get there.
Okay. Shall we move on? Segue to the next topic.
Yeah. And I'll flick through these ones fairly quickly. But the starting point for the task force was to look at obviously the categories that other jurisdictions had already come up with in terms of PI definitions. We've already got some jurisdictions which start with the IAASB definition, which we add to it. some jurisdictions actually elevated the current application material in the IAASB code for firms to determine if additional entities should be treated as prior to a requirement. I have to say that's one of the things I think we are very inclined to go down that route at the moment. The countries which seem to have adopted that seem to think it works quite well, and I can't see an obvious reason for not doing that. The other thing, though, is that, and I'll come on to the next slide, is you flip over, Jeff. We decided quite early on it was difficult, if not impossible, to come up with a single definition of PI at a global level, which would not in itself require significant modification at a local level. And just by way of illustration, I put up the EU PI definition. So it starts off by, that is a regional definition, which is the closest we've got to a current global definition, if I can put it like that. They do have the advantage that even though it's a regional definition, there is a body of EU law that they can then have regard to in terms of how they define things. And again, it's something that we picked up very much from all the other jurisdictions we looked at. As soon as they started to define entities, it tended to be by reference to some other local legislation that governed those entities. So if you're talking about banks, it was whatever the banking law was in the territory. So here you get at the EU level, credit institutions are defined in something in a directive. But they then decided that they were going to put in a whole load of exceptions because they appreciated that what was a credit institution defined at an EU level was not necessarily of significant public interest at a national level. And the obvious exception you had in this one is it tended to carve out all the credit unions. They couldn't do that at an EU level. So you have actually got, in effect, although it's in EU law, you've got a series of carve-outs which are defined at national level. So it defines credit unions by whatever the national law is governing credit unions. Insurance undertakings, when I looked at that one, I sort of gave up the ghost because you have to go down sort of 3 levels to work out what's in, what's then excluded, what you take out again. And again, different things impact at the EU level as compared to a national level. And the last one, of course, is they pick up entities designated by member states, so anyone can add to the list. And that just, if you like, illustrated to us that it was almost impossible to come up with something globally that people would not want to tinker with, both in terms of adding and subtracting at a national level. And if you can flip on, Jeff. So we decided, frankly, there were 2 approaches we could take. We could continue, in effect, with a very short and narrow list of categories. And basically, it's local regulators add to it. Or we could try and come up with a longer and more broadly defined list, which would meet, if you like, some of the public expectations that we have, that we should be articulating better what we think should be a public interest entity. But we would specifically allow for the fact that local regulation authorities can modify that, both by tightening the definitions in terms of reference of what we broadly define as credit institutions, tying that back to what local legislation is, potentially setting size criteria. And I have to say, if we go down that road, I don't see a particular logic in setting size criteria for one category of pies as opposed to a different category of pies, which might help the Canadian problem with listed entities, but that's a slightly separate issue. And potentially adding or exempting particular types of entities, so the sort of credit union piece, some of which are not even what you might regard as quite a large institution may not, as a credit union, even require an audit, let alone having enhanced confidence in its audit. So I think the size cutoff for credit unions in California requiring an audit, for example, is 20 million, assets of $20 million. That would probably be quite a large credit union in a lot of other countries. So that was the thought, and that was the approach we decided we want to take. So we decided we were going to go down approach 2, i.e. start with a broad list. And that was, if you like, the role of the code was to set out our stall on that, but fully expect that local bodies, and indeed encourage local bodies and give them guidance as to how they might do this, to refine that list. And lastly, to have still, to some extent, as we have today, but slightly beefed up in terms of the role of the firms to add, they can't subtract from that list, but they can add to that list. And in adding to that list, it would be a requirement for them to think about it rather than just application material. They might like to think about it. So that was the general approach. That led us then to say, well, what would that larger list look like? And it's based largely, as it says there, on a review of PI lists in other jurisdictions. It adopted what I would like to regard as the 80-20 rule. So we included in this categories that potentially people might want to exclude, but only if they were very small. So in other words, it's you're in unless you're not, frankly, big enough to move the needle on any dial anywhere, but not to include so much that everyone takes out 90% of it. And therefore, we weren't going to include categories that were only there because of their size. Principally, I have to say, because at a global level, it's almost impossible to come up with a definition of what that size would be. So we haven't included, for example, as a category, in inverted commas, large private entities, simply because of the difficulty at a global level of saying what large private entities are. That's not to say that we wouldn't expect national regulators, and indeed some national regulators have done, to add in that category if they felt it important in the context in which they were operating. And I have to say, one of the contexts in which I think they need to be operating, and I know has happened in the UK, which I commend, is that where they have expanded the PI definition, for want of a better term, to private entities in the UK, they have also tackled the corporate governance issue in terms of it is the same entities which are also subject to an enhanced corporate governance code, which kind of picks up the point that you do need somebody sensible in terms of those charged with governance on the other side of the equation for the communication that is a consistent theme of both your and our standards. The general support, as I say, for proposed categories there, a few have queried post-employment benefits, and we would have to be careful, I think, about how we captured that, because it's not designed. It's designed to pick up a retirement scheme. It's not designed to pick up a private employer who happens to be providing benefits for its employees. If we can just keep going for a minute, and I will pause for questions again separately, you will note that in looking at the PI definition more broadly, we also kind of tried to tackle the listed entity definition as well. This is the existing definition, which I don't propose to dwell on. If you flip over again, we have spoken to both the Forum of Firms and a number of NSS participants in one of their calls. In speaking to the Forum of Firms, it's quite clear that they do, as a generality, extend the listed entity definition for their own purposes beyond what is just recognised stock exchange or even regulated market in the EU PI definition. And they do extend it to securities markets, which are generally open to the public. For NSS participants, listed entity tends to apply not only to the primary market, but to some other secondary alternative markets. So AIM in the UK is picked up by the FRC effectively as a public interest entity. Canada, as we've said, has got its size test. PCAOB, SEC use issuer, but that's in the markets that they regulate, so to speak. And as I think it does pick up pink sheets in the UK, which are not on the main market. And in the UK, we don't include entities whose securities aren't, as a matter of course, traded, even if they're listed. So it may be a peculiarity of the UK, but there are a number of groups where there were tax benefits in having a debt issuing vehicle that was listed, the favorite place being Luxembourg, but it was all its debt was issued intra-group and none of it was external. So it gave you a tax benefit. Under some definitions, it would be picked up as a PI, but actually it's got no external debt, so why would you? So there are all these variations on the theme. That led us to think about having as a sort of starting point, rather than listed, you can go on one to pick up what we've put in category A, which is an entity whose shares, stocks, or debts are publicly traded. There are variations around the wording on that we might think about. We were accused of being a bit old-fashioned when talking about shares, stocks, or debts rather than financial obligations are publicly traded on the basis people have got weird and wonderful instruments they may issue these days, which might not be captured by that definition. And there was a discussion about whether it should be available to be publicly traded rather than are publicly traded, so you're not excluding people just because there are thin markets in a particular stock. But that aside, that was the sense of direction that we wanted to go in terms of that. We also, if you move on again, Jeff, we also, no, back one, back. Yes, thank you. We also were challenged about whether in the process of being publicly traded, which I think is one of the things that Rich asked about, and to consider entities in that process. The IFRS for SMEs, which I know again somebody said IFRS uses listed, but it does also have this definition of public accountability, and that had things that might be coming to listing. I think that I think we're certainly of the view there can be public interest in the financial condition of such entities if they're on the cusp, if you like, of becoming a public interest entity. The issues are at what stage in that process should you be including it, and how you would articulate that in the code. And indeed, why would you again restrict it just to listed entities? You had something on the cusp of becoming a bank, which did not already have a deposit taking license. Would you not also include them? So one of the options we did think about including the additional factors for the firms to consider. So if you like, it can be much more tailored to the individual circumstances of the entity, both in terms of the likely timing at which point it would become a public interest entity. Was say, if it's likely to become a public interest entity before the conclusion of the subsequent year's audit, the firm should think about bringing that forward 1 year. And that was one way we thought we might tackle that one. If I could just flip onto that and then stop for questions. So again, back one there. So thinking about our objective there in terms of that list, what it's designed to do, which I say is very much a starter for 10 for local bodies to then refine. I'd be interested in 2 or 3 questions. One is, would the first thing work as a possible replacement for listed entity, even if we don't go to the extent of replacing listed entity in its entirety with pies? How should entities about to enter the public market be addressed? And any views on the categories that we've got in B to F? Or B to E, really, because F is, I think, taken for granted.
Thank you.
And I'll pause there. Thanks, Tom.
Thanks. Okay, so there are 3 topics that Mike and the IAASB task force are seeking comment on. Any comments? Kaiue?
Okay, Tom, thanks. I will make the the start. I'm in favor of category A, but believe some sort of exception must be made for situations when securities of an entity are publicly traded without the entity having undertaken any action to become publicly traded, and therefore the entity itself is not subject to any public regulation. My second comment is also to A, if concrete steps have been undertaken to become public, treating the entity as A should be required. And then I have commentary to B and C. I'm in favor of category B and C as well as E. However, category D may be too broad because there are some entities that provide post-employment benefits to a few individuals. including to only management. We could expect management and some kinds of individuals to not need the protection that might be afforded to large numbers of unsophisticated individuals. Perhaps this category should be limited to those entities that provide such benefits to a large number of non-executive employees. I also do not agree with F, because it would make the IAASB and the IAASB definitions verbal, which was a part of the problem with the old IAASB definition. This caused problems when some jurisdiction classified some entities of PIEs for other reasons, but there was no intention to extend changing independence requirements and auditing requirements as contemplated by IAASB and the IAASB to these entities, including little f is not necessary because national authorities ought to be in a position to extend IAASB and IAASB requirements to additional entities as they see fit. That's all. Thanks, Tom.
Thank you. Sue?
Hi, thank you, Mike. There was an awful lot there, and I'd like to address some of the general points as well as the specifics you had there, because I think the structure you described of global, local, and then the firm setting requirements is important. I think it's key that we have as much consistency around how companies or entities are treated from one firm to another. So I understand everything you've said about difficulties at a global level, but the regional or the local level, I think, is a really key element here. And I personally would like to see the firm as really essentially the last resort. And part of the reason for that is it would be, be counterproductive if we had entities being treated differently from one firm to another, particularly given that this kind of requirement has impacts on audit costs. And it would be not in the public interest, I think, to have companies moving between one auditor to another to see whether they were going to fall into one category, particularly if you're looking at someone that's perhaps about to come into one of these categories. So that was on the general principle. On the detail that you've got there, we have a few comments that I can send in offline, particularly around things like clarity of what we mean by main function. Thanks.
Thank you, Sue. Lynn?
I want to pick up on the point that Imran made in terms of the objective. When I read the objective in 400.8, I could clearly see the public sector in it. When I got to this list, I was struggling a lot more in terms of seeing how the public sector would fit in. Obviously, there are bits and pieces that you definitely, governments certainly have insurance companies, they certainly have post-employment benefits, but I am concerned that it seems to be, at least a prima facie view, excluding sovereign governments, and I think they should be included. And that comment also includes charities. But I may have missed something.
Thank you, Lynn. Julie?
Thank you. Just to respond to the comments, supportive of what you've done for category A. I do think for the second question around entities about to enter the public market, I think it's really challenging to put that in the definition. And so I think how it's been suggested to include material that a firm would think about is probably the appropriate way to go in my mind. For the categories, I wasn't It's interesting because I read the presentation first, and then I gone to the drafting in the code that was suggested, and I had a little bit of trouble trying to reconcile the specifics in the presentation to the code. I actually thought the presentation made it more clear for me what entities were in, and the wording that's been drafted, it to me was less clear. So I don't know if there's a way to maybe reduce some of the fix some of the wording in the code drafting just to make it more specific as to what entities we think this would include, because I did struggle with reconciling the two. I had a similar thought about the firms and the inconsistency that could result if the firms are left to make a number of these decisions, similar to Sue's point. So I also share the same concern on the potential inconsistency if firms have quite a lot of leeway to decide what's in and what's out. Thank you, Tom.
Thank you. Roger?
Yeah, so just picking up a couple of themes consistent with Sue and Julie. The less we can have the firms doing the decision and the national regulators doing the decision is beneficial. Another broad comment is on the broad versus narrow from a national standard setters perspective. Very much pride that I am not ISA minus, so taking away any category. So starting with the broad and taking away any category may be problematic in signalling that. So that's a consideration. Going to the categories, the category that causes me the most concern is D at the moment. So that's not worded well, and if you can get better words around something of what you're intending there, that would be beneficial. With regards to the specific questions, I am comfortable with the replacement for listed entity to publicly traded. I was actually comfortable with the way that you had tried to pick up with the entities in the public market. So I thought that was quite a good way of trying to do with it. There might be some practical implications there. And I think that covers off my views. Thanks, Tom.
Thanks, Roger. Chenry?
Hi, everyone. Good evening from Singapore. I want to start by giving a comment. It's a more general comment on the whole structure of how we approach this. I was looking at the agenda paper, item 1B, which is IAASB agenda 8A. And in the paragraph 49, where in the second half of the paragraph, it talks about how the code should deviate from its normal practice and allow law and regulation to tighten the broad categories. So I'm just looking at that and going back to the draft, and I wonder whether there's a different way to approach this. And in my mind, I think the 400.8 is, to me, the broad description, definition, if you may, of pi. And our 400.14, A to F, arguably you could say that these describe the first bullet point, which is the nature. And if you sort of link them up that way, you have the rest of the bullet in 400.8, the size, the importance, etc., which basically talk about the impact, the significance. That will help sort of carve this and put this against the backdrop of the significance. So you have this nature, you have to consider the nature of these against the backdrop of the significance. And thereby, I thought, avoiding a situation where you definitively define them in 0.14 and then in a subsequent paragraph say that you could have exception in that way. So I wonder if that might be a different way to structure this that will avoid that kind of situation. So to the point that some of our colleagues raised about companies potentially shopping for auditors that will categorize them in a favorable way, I think perhaps in my mind, and I may be thinking about it in a very simplistic manner, it is about supporting the part 2 and 3, which is the laws and regulation, as well as the firm, in how they then go about making the decision about what should be categorized as a pie. at the local level. And I think in this case, the guidance that we can provide them will be really helpful. And I think what the task force has done around the different categories that we are going to talk about in the later set, be it on charities, large private entities, public sector, etc. The different factors that are in place that actually come in play to determine whether you drive it towards a pie or a not pie category. I think if we can do more around that and provide more guidance, that might help drive some consistency on the global basis. So I'm not responding to the specific questions specifically, but I have these just very broad comments that I thought I'll make. Thanks.
Thank you. Rich?
Thanks, Tom. So a couple things on this. I apologize, I'm going to jump around a little bit. On the question of the definition of listed entity, I'm probably against where we moved to. I do understand why it was moved, trying to get rid of the recognized versus regulated, but I also think publicly traded brings similar type of questions. Publicly traded is, could it just be some people trading that, not in a recognized or regulated market, but, just a group of people? And, is it a subset of the overall traded? I just started, my mind started bouncing around on that one. But I do understand the regulated question that you're trying to address. The other question I had on this, and it really came out when Mike was talking, was that nuance of publicly traded, available for trading. Maybe I would go to the available because publicly traded, I could see an argument of someone saying, well, it wasn't publicly traded this year, therefore, it's no longer a pie. And, I know we wouldn't want to go down that route. Maybe available for trading would get you through that. The question of extending it to those entities that are about to list, again, I'd say IFRS has already gone there, so I have no problem with this factor. I'm also don't have a problem with going into a requirement. I think it'd rather be a requirement than a application material. I think application material might be there to explain the factors that you might want to consider as to the timing of when you start taking that into account. It's clear if I have a prospectus in front of me, then I would take that into account. But the question is I know they're doing it. They're starting to talk to the book runners. Does that mean I start taking into account? So I think maybe some application material might help you there. On the broader versus narrow question, I start to have questions about in my mind whether you really want to have a list or even factors to consider that would always apply. And so to my idea, just throwing a very broad list, and in many countries you would have to tailor that down because they just don't apply at that level. Starts to put onto me the question of, okay, I have a very sophisticated market, so they're going to go through and make these changes. And then I have other markets who either aren't as sophisticated and therefore get stuck with the broader list, or very much so. I've seen the question that Kai Ua brought up about countries who, for one reason, changed the definition of pie. It had the follow-on impact of how do you deal with it for financial and independence and other reasons, even though that was not anywhere in the idea of why they originally changed the definition of pie. So I think we can't assume that all regulated or markets are the same sophistication. Therefore, I would try to get to categories or characteristics that would apply in all cases. You'd be happy that from a global basis they're being picked up that way. Let me just see. So I would also comment on Kaiwu as part of F. I have a problem with that being in. At the end of the day, a regulator can make their change if they want to. So not sure we would need to have that in there for the reasons that Kaiwu mentioned. And then D, like a couple others, I wonder how that gets filtered down as to what, so we don't cover too much in that. Thanks a lot. Cheers.
Thank you. Bob Dorr. Oh, we have 2 more hands up, and then I'm conscious of Mike's time. So we're trying to we want to give Mike a chance to respond, and he has to leave in 4 minutes.
Okay, I'll be very brief, Tom. Thank you. I just wanted to comment on category A. I'm comfortable with where this is going, but I think like Rich, I have some questions about it. It would need to be fleshed out what publicly traded really means. Things like large private placements and things like that come to mind as raising questions. Essentially, on the issue around entities about to enter, again, I'm generally in favor of leaving as little discretion as possible to firms for many of the reasons that have been stated. But again, we'd have to have some guidance of some kind to determine when you've crossed that threshold would be very important. Generally, for the rest of the categories, I support these broadly as long as local jurisdictions would have the discretion to put limitations on sizes and number of participants and things like that. I think they work. Item D on the post-retirement benefits does give me pause, just because I think that needs to be better defined, and that's an area where I could certainly see a local jurisdiction establishing limits on the size of the number of participants and things like that, but generally supporting. Thanks, Tom.
Eric, sorry.
Thanks. And yeah, basically repeat what Bob just said. Of the areas supportive of broadly of the categories, and but could see some challenges with some of the specifics. And like Richie's comment, I think there is a danger that regulators will make decisions for different reasons than we would use them for our purposes, and so they may conflict with some of the objectives. That's all I have. Thank you.
Thank you. Isabel, if it's a 10-second comment, otherwise I need to get Mike to have an opportunity to respond. Otherwise, I'll let you come in afterwards.
Okay, a quick comment just on in A, publicly traded. While the regulated market, we had a list and it was clear if an entity was in this list or not. Publicly traded seems vague, and like some others, some entities may want to be considered as a non-PI because there has been no trading on their shares during the year, just because there is no activity. And I'm sure that's not what we mean when we say publicly traded. So this would have to be clarified. Thank you.
Okay, thank you, Isabel. You did stick to the 10 seconds, so star for you. Mike?
Okay, I'll try and pick up some of those points, not necessarily all of them. Thank you for the comments around share stocks or debts publicly traded. As I said before, I do think that we would certainly say available rather than necessarily have been, to pick up that point about any specific lack of trading doesn't necessarily rule you out. I would be interested in views after this from people around the world as to areas where they think we might inadvertently pick things up by that sort of definition. And one of the reasons I went for publicly traded rather than just publicly available was that there is a class of entities in the UK which offers its stock effectively through managers, for want of a better term, in order that qualify for a thing called enterprise investment relief, and they have to offer it to the public through a manager, but you own shares in the underlying entity, and therefore they are held by the public. They're not traded. The manager determines when they're sold or cashed in effectively. And there are a lot of very small operations, as you might imagine, hence the enterprise investment allowance. So you wouldn't want to capture things like that. So I am interested if people have got specifics, examples of things that might be either inadvertently dragged in or dragged out. In terms of the role, and I know you'll come on to this a few more slides later, in terms of the role, though, very quickly, of national regulators, I do understand the concern that if somebody's defined something as a pie without having regard to our overarching objective as to what is and isn't a pie, that is unfortunate and wouldn't lead to the right answer. One of the things we've tried to articulate in the thing today is to slightly get away from just using the term pie in that context, because again, other nationalities may not use the term pie, but may have something which meets the overarching objective. So I do think there is potentially some mileage in looking at framing it in that respect. So in other words, if somebody has defined a pie for something which is clearly nothing to do with our overarching objective, I don't think we would necessarily drag that into this net. And I think that's something we can certainly take on board. I fully accept the point about the role of firms, and it is the last resort. One of the things we, as you'll come on to, we have tried to do to mitigate any sort of opinion shopping is to say, actually, because again, we recognize that because different national jurisdictions may take differing views on what is and isn't a pie, and therefore, if you like, the waters are muddied somewhat as to what is and isn't treated as a pie. One of the other things that we are keen on, and again, this is coming back to hoping for the support of your board in that, is for auditors to make it clear in the audit report if something has been treated as a pie. As simple as that. And hopefully that will help mitigate against the opinion shopping piece. I won't comment particularly about public sector and charities. I know you're going to come on to talk about different categories later. They did all tend to fit under the, I'm not sure most national jurisdictions would automatically include them. Charities comes under the size problem. Only large charities, clearly people don't expect charities to be spending their money on audits unless it's necessary. They don't expect to be spending their money on enhanced audits unless it's necessary. So again, I think you've got a size criteria there. And an awful lot, of course, of public sector is not actually audited by firms of accountants or elsewhere. So some of the requirements we put around things are not necessarily totally translatable. That, I think, was all I was going to cover. But I did get the sense that, particularly part D aside, where I fully agree that we need to hone in better on what it is we're getting at. I mean, basically, it's large pension schemes, which have got a long tail of financial obligations to a large number of employees. So we can think about how we might better articulate that. But I got support from the others, and I got support for a sense of direction of travel, although some concerns about how we actually frame A was what I picked up out of that. Tom, is that fair?
I think so. And as I said, on this one, it's not going to be the last time, that we talk about it. So I think you got some robust feedback on that. I know you like.
And sorry, and I would welcome any additional comments that people have got. Obviously, send in to Jeff after the meeting. That would be great.
Yeah, I know you have to drop now. So
I do. I fear.
Thank you, Mike. I actually think it's a good opportunity for us to break for 10 minutes. We have, as I remember, it's one more topic on this major topic to discuss on the IAASB pie topic. Is that correct, Billy?
There's one which we can skip over, which was, and again, just invite comments from people after the event. But in terms of the various categories we did consider and the reasons that we excluded them, I think are laid out in our papers. So if we've got comments from people on that they can send in afterwards, I think you could safely skip over that. A bit more discussion about the role of local bodies might be helpful. And again, if I can just frame that, because the reason for coming up with the list, this potentially, sorry, answers one of the other points about why we did 400.14 as a definition as opposed to merely part of the criteria under 400.8 and 9 was, if I can put it like this, it was designed to almost force local regulators to take to do something with it, as opposed to just giving them a set of criteria they might not decide either to adopt or not adopt, if you see what I mean. But it's not the only way of approaching that. And indeed, the whole issue of the role of local bodies is one where we're doing some more research, and it's clearly an area where we're going to have to do some more outreach as to the capability and capacity of people to pick up this particular ball we would like to hand them. Okay.
Great. Okay, so we'll break here. It's 8:36 my time. Why don't we give us to I don't know, 8:50 my time. So 13 minutes now. It's 8:37, and then we'll reconvene at 8:50 a.m. Eastern time. So 10 minutes to the hour in your jurisdictions. See you shortly. Thank you.
Thanks.
Tom, can you hear me?
Yes, I can.
We have an IAASB meeting at 9, so I and others probably have to leave at that time. So I just wanted you to know that.
Oh, okay.
After the week. Okay.
Okay. Sorry, I would have continued plowed through to 9 if I had realized that.
Well, you just touch on that one topic, and
we'll get you the feedback.
I will certainly depart. Richard may want to stay on for a few minutes.
Okay.
Well, I think I'm due to finish it off, Stavros.
Okay.
Thank
Chris, are you comfortable with 10 minutes left or something?
No. I think the plan was that if Mike left, I would finish the presentation to the IAASB.
Yes, so you will. I will depart. As you know, we have our meeting. I will depart, but in our agenda, I think you come up later, so you can stay on a little longer. Is that
yes, so I'll join you as soon as I can.
Yeah.
Okay. Very good.
Yes.
Very good.
Yeah. Stavros and I will need to go into our board meeting.
Yeah.
Sure.
Okay.
Thank you. Thank you, Tom. Good meeting. Good meeting. I think we got a lot of good input. Thanks a lot.
Jeff, are you still on? No.
Yeah, I'm here.
Just a reminder, we're still on the live stream.
Oh, right. Okay. Well, all right. That's fine.
Okay, boy.
Hi, everyone. We should be getting back in a minute's time. Okay, could everyone rejoin, please? Richard, are you on the line?
I don't know whether you can hear me, but I am.
I can hear you. Thank you. So I'll leave it to you, and we'll try to get you back into your meeting soon enough. I think you probably only require about 15, 20 more minutes for
Sure.
to conclude this topic.
Hopefully I'm now audible and visible.
You are.
Thank you, Tom. Well, thank you, and good morning, good afternoon, good evening, everyone. I'm going to try and take us to the finishing line on this project. I'm going to skip slides 27 to 30, which is a discussion of the different categories that the task force has thought about, largely because the rationale for the approach that's been taken has already been set out in the papers, and because I think this will be the subject of ongoing consideration. But if you have views on any particular one of those and why they should or shouldn't be included, please don't hesitate to send those views to Jeff, and they will be taken into account by the task force. So then I'll focus, if I may, on the role of the local bodies. It's central to the task force's proposal that the codes list will need to be refined because it's of its high level nature, and also because of the particular circumstances from jurisdiction to jurisdiction. And one of the aims will be to ensure that the standards appropriately scope the right entities and are adjusted as necessary to eliminate or omit the entities that should not be treated in the elevated, if I can use that word, way. I think it's already been made clear the reasons why that can't be done on a global basis and why it should be done on a local level. I think in this context, it's worth just pointing out that there are certain jurisdictions where this has already happened. And I particularly note South Africa, Australia, and New Zealand, and their experience of dealing with this has been very effective. And if I may, Jeff, we'll go on to the next slide. But there is a qualification to this. That is that it's very important to understand what the authority and the powers of the relevant bodies may be in different jurisdictions. And to address that and to make sure that we properly understand what the arrangements could or will be, the intention is to circulate a questionnaire of professional accountancy organizations, asking them to explain the environment that they have so that we can then develop appropriate additional guidance to help the application of the role of the local bodies. And that will also be supplemented with outreach to a number of different categories of individuals, IOSCO, and then also regulators and national standard setters. So there's a clear understanding that the role of the local bodies is critical to the tuning, if I could use that word, tuning of the arrangements in each jurisdiction to ensure they're appropriate to that jurisdiction. And there's work to be done to understand what we need to do to support those organizations. And I think that's on the next slide, Jeff. And so the plan is that there should be an overarching objective, which provides the, if you like, the governing guidance, and then supportive non-authoritative guidance for each individual country, location, or addressing particular types of circumstances, and also a transition period that allows the time and the opportunity for local bodies to make the appropriate judgment. And so if you go to the next slide, it's really a question of asking for your comments on this and your views on how this operates and what we should address that I haven't already covered as being areas of that require further examination and consideration. Tom, back to you.
Thank you, Richard. Comments on it? I assume we're going to get a couple based upon previous comments. Kaiue.
Thanks, Tom, and thanks, Richard, for presenting a very brief comment, including a role for local bodies to scope in, or more importantly, scope out entities from the definition of PI can only be operationalized if firstly, the application material clarifies that local bodies can include additional types of entities as PIs, or secondly, the requirements in the ISAs and the code permit local authorities to scope out some kinds or sizes of entities out of the definitions without not being able to claim compliance with the ISAs or and the code. Sorry, thanks.
Thank you, Isabel.
Yes, hello. My comment is more to testify about what happened when in OADA space countries, so it's 17 French-speaking countries in Africa, when they had the project of adopting former ISBA code, and I was part of the project. And already at that time, they struggled a lot with the concept of PI, because it did not exist in their corporate law. So there was nothing anywhere. And when you adopt ISBA code, then you have this concept that is embedded in the law and is not connecting to anything else elsewhere in the law. So there were a lot of questions, and a lot of them have remained open. So with the new proposal to give power to local bodies to amend, I think it will not solve anything, because there's no local body that has the authority to do so. So I would recommend on that topic to also work with the World Bank, because the World Bank is fully aware of these topics and has a clear view on who is adopting the international standards and the ISBA code of ethics, and they are funding projects to implement the code and the international standards in the countries, and they can help the local bodies or anyone involved in the project to do this adaptation. Because I know that if it's not taken on board by a project funded by a donor, nothing will ever happen in these small countries that have no body in charge of that. Thank you.
Thank you, Isabel. Rich?
Thanks, Tom. And I did say this a little bit earlier, but I guess it's the time to come in. Again, I'm definitely of the view a global understanding of what is PI, and that there should be local tailoring. But to me, the local tailoring should be upwards, i.e. what they want to add to it, then subtract. So if under, again, we're talking the IAASB code, but under the IAASB, where we make a decision to use PI, and therefore we expect certain types of entities to be covered, for example, banks, and a jurisdiction says we delete banks. So I'm, it seems hard for me to understand how you would allow a deletion. I understand how you get there based on the global local firm type approach, but again, I think it's fraught with concerns that you won't be getting what you expect to be getting. Different territories will do things differently for their own reasons. I'm fine with trying to make that allowable for them, but I'm not sure cutting it down would be the right approach. Thanks.
Thank you. Imran?
Thank you. Richard, it's good to see you again, and thanks for stepping in to spend the afternoon with us. Richard, I noticed, or perhaps I missed the discussion around the expanded list of entities. There was a set of slides around that. But noting that, moving on to this conversation, I come from a jurisdiction where we've actually had a lot of experience, a multi-year project around the development of a broader PI definition. One of the things that has happened in such local jurisdictions, Richard, is that we've now used the IAASB PI definition, plus however we've amended it, for other purposes, mostly independence related, but for other purposes. So for example, we've used that definition to prescribe mandatory audit firm rotation. We've used that definition to prescribe disclosure of audit tenure. And so the idea that local bodies would be able to take the new international definition and apply it, it's going to take a fairly detailed consideration of what that impact is going to be in localizing it. I really just want to make that point, that the point that others may have made up about the lack of capacity, even where one has a capacitated regulator, we've used it for other purposes, and we have to think through the implications of this. And perhaps it'll take a lot of effort and a lot of time.
Thank you, Imran. Josephine?
Thank you, Richard. Similar to Rich, I am also uncomfortable with the idea that local bodies can delete from the list. To me, that seems to undermine the objective you're trying to achieve here. And instead, perhaps we could go back to words modify, perhaps modify in accordance with 400.8. But I just wanted to support Richard's view on that.
Thank you. Lynn?
I think ultimately we're looking for some kind of, as far as we can get to, some global consistency in this area. And so I absolutely agree with Josephine and Rich that there should be some kind of minimum standard, and deleting those that we think at a global level are important, I don't think is in the public interest. I also, around New Zealand, there are lots of small developing nations, and I don't think they'd actually have the capability, a lot of them, to do this kind of modification. So there needs to be some kind of support or some kind of process or some comprehensiveness at a global level to deal with those situations, with those countries, and there are a lot of them. Thank you, Tom.
Thank you. Roger?
It's a consistent theme, Richard. Look, I think there is categories there which should not be able to be deleted, and they should be identified. So I'd probably go for the narrow, building up to the broader view of that. Other categories which should be a consideration. I do feel uncomfortable about deleting for the reasons that Rich and Kaiui have indicated. Certainly, we would need a clear statement that this is still a compliant with the ISIS.
Thank you. Eric?
Thanks, Tom. So yes, on the one hand, I agree that a local body should not be able to delete a particular category of entity, but I think within those categories, I think there is a need for some flexibility because in certain jurisdictions, I think as others have already mentioned, the nature and type of entities that fit that broader category may have very minimal public interest implications. And so I think the local body should be able to adjust appropriately without necessarily being identified as not being in compliance with the IAASB code. Thank you.
Thanks, Eric. Kai Morgan.
Thank you. Similar to Rich and others, I have concerns with deletions from the definition. And therefore, I think the definition needs to be a narrow scope so that it can be expanded by jurisdictions that want to include more. Also taking into account that some jurisdictions may not do additions or deletions, so that the scope needs to be narrow.
Thank you, Kai. And Karen?
Yes, thanks very much. I just want to say,
You're very faint, Karen. I'm sorry.
there, that should fix it. I want to say that I'm very, I think not myself only, but the PIOB is very happy with this effort to work on a very important public interest issue on public interest entities. It's not an easy topic, and it is really brave that you have undertaken it and not just chosen to not do it because it's difficult. I just wanted to raise the thought that when you go with the minimum definition, a minimum level, a standard, there's always the challenge that that minimum can be very low. And to create agreement globally or create consistency, or so I just wanted to point out that you know, when talking about the definition, we should always keep in mind the public interest. Thank you.
Thank you. Any other comments? In fact, we've got quite a bit of consistency in our comments on this one, Richard. So maybe the rare time that there's almost consensus without us speaking together beforehand.
Well, I've absolutely, Tom. I mean, I've taken away the message that there's real concern about the ability to take away from the definition. And I follow the logic and concern about that. I think that the comment that I would make by way of response is that the concept of being able to modify maybe to reflect local jurisdictions, maybe a better way of thinking about it. And I have, for example, the thought that, you know, you could have the same sort of issues as exist about credit unions, but also size can be a factor that causes an issue. But we'll think about that and take away those points. And can I just thank Isabel for her comment about the World Bank? That's certainly something we should look at. And we'll think about how to take that forward, because, as Lynn said, there are a lot of countries that don't have necessarily the skills and the resources to address the customization of the arrangements, and steps that can be taken to help on that front are obviously very welcome. Can I go to the next issue then, Tom, if I may, which is the position of the firms. I think I'd really like to take this quite shortly, because I think we all agree, and indeed it's come through in the previous comments, that firms should be the last resort where this is concerned. And we want to try and ensure that to the extent that they do play a role, they do so in a way which is as consistent as possible, and we don't get people picking and choosing according to the approach that firms take. The important points to make, I think, are that the task force wishes or proposes to elevate the role of the firm in relation to the designation of entities as PIs or not into a requirement rather than relying on application material, so that is something that firms have to do, and have to do in a transparent way. Again, it's noticeable that that's been adopted, approach being adopted in Australia and South Africa, and I think that has not caused issues for the firms, and I think therefore the position is that ought to be relatively uncontroversial. It's an approach that the Forum of Firms and the National Standard Setters have also been supportive about. Imran may want to comment on that, and so may Lynn or somebody else. And then moving on to transparency, keep going. The intention is that this should be clear in the financial statements and the audit report, and so that it's clear the approach that's been adopted for a particular entity and the treatment that it's received as a PI. I will quickly do the next couple of slides because they are really to note, please, Jeff, that the discussion about the terminology has been to focus on retaining the definition of the term public interest entity rather than significant public interest entity, and to note that there are issues to be resolved in relation to related entities and how they fit into this approach. In particular, and I can speak from my own experience, there is concern about the relationship between PIs and unlisted parents and various other issues of that nature, which we need to think through and develop as we go forward. And that's the intention of the task force over the coming quarter. So again, Tom, if I may, I'll pause there and let people make any comments they have on the position vis-a-vis firms and the terminology that the task force is recommending.
I guess respectful of time, if you've commented on the firm point already, I think noted for the record, it's on the record already, but if you have comments on other issues or have not commented yet, please feel free to. Rich?
Thanks, Tom. So 2 points. One, on the firm question, I think where the local legislation is silent on a particular topic that might be added in the guidance, I can see where the firm has some judgment to be applied. Where the guidance, local legislation is not silent, I think that's just wrong. At the end of the day, we should, the audit firm should not be second guessing whether the local regulators should or should not have treated something as a PI. So, I think there's maybe it's language you can get around to put it the other way around than it is. The other topic about the disclosure in the audit report, I'm just not there. I think again, it undermines the audits of non-PIs, as well as it's just one more thing cluttering up the audit report. So again, I'm not sure that we gain much by putting this in the audit report. Thanks, Tom.
Thank you, Rich. Eric?
Thanks. Just supporting Rich's comment on the disclosure in the auditor's report. I think that would create significant confusion, and as he said, also undermines other audits and what the difference between the two might be. So I don't support that proposal.
Chun-Wei?
Thank you. Just want to come in quickly on the transparency point. Maybe a little bit similar to Rich and Eric. I don't fundamentally disagree with that proposal, but I think the question that we need to have is how would the users of the financial statements, how would the users of the audit report perceive it? So we don't want to undersell and we don't want to oversell as well, because we will be widening the expectation gap. So I think if we do proceed along that path, there needs to be a very robust education process, or there needs to be complementary disclosure to really explain what that means. So that would be my take.
Thank you. Kaiue?
Yeah, thanks, Tom. Very, very brief. I would generally be in favor of the auditor's report clarifying if an entity qualifies as a PI and therefore was treated as such. Thanks, Tom.
Thank you. Isabel?
On the transparency point, if I take the example of Europe, we have CAM mandatory for all audit report of PI. And we have also additional requirements for audit report on PI. So just by looking at the report, you already understand that it is an audit report on a PI. So I don't see what it would add to add specifically that it's a PI, because just by looking at the format of the report, it's obvious it's a report on a PI.
Thank you. Imran?
Richard, to respond to both of the things that you've raised in this block, I think the proposal on reporting is something that we should explore further. I'd like to say that I'm generally in support of it. I think we're seeing more of this happening, and we certainly don't see any pushback from an investor community in wanting to see us say more in our report. So, words like clutter and confusion may arise, but it'd be good to hear from the investors whether they think there's too much in the report. I don't think that your proposal is dissimilar to the discussion our two boards have had before about the disclosure of fees, where the entity hasn't disclosed the fee and what options are available there. And I think this is part of a journey of additional disclosures that over time we'll see the audit report evolve into. In relation to your direct question, because we have had a few years of experience on what I call the firm's stand-back provision, this is a stand-back provision of sorts. Are there any other entities that should be PIs? So the few years of experience we've had, to the best of my knowledge, we've never had an inspection finding about it being misapplied. And we've never had an objection from the firm since it's been in place about difficulty in applying this requirement that we've had in our code. So I thought that may be helpful for you to firm up on that proposal. Thank you.
Thank you. Sue?
Hi, thanks. On my feedback, I'm not supportive of the audit report disclosure. I'm not aware of stakeholder demand in that area. And Imran referenced the investor feedback. Most of that is around wanting more description and not wanting more boilerplate. And I think this would be a boilerplate item in the audit report. I also feel that when we're talking about disclosure, primarily the emphasis is for the entity to disclose this material. But I think Isabel's made a really good point around the fact that it is obvious. So yeah, that's my overall. Thanks.
Thank you. Lynn?
I'm in the same camp as Eric and Rich and Sue in terms of the including it in the auditor report. I think the user needs clarity in the report, and I'm not sure that this is helpful for them. And going back to the first point I made at this particular meeting, the two levels of quality I find very difficult to accept, and I don't think it's in our professional interest to go in that direction. Thanks, Tom.
Thank you. Josephine?
I'm just commenting on the additional disclosures, Richard, and actually I'm in favour of greater transparency in the auditor's report. Thank you.
All right. You got actually, it's the last hand I see up on this topic. Quite split views on this topic from us, and I'm not sure how you respond to that, Richard. Is concerned about, I hear one of the concerns is about usefulness to users. Imran suggested an approach to actually verify that among some people. There's concern that we had earlier about embedding the two-tiering of a system or the perceived two-tiering of a system. Honestly, I understand the concern of some on that, but that I think merits consideration, and that some just believe it would be unnecessary, whereas others think a further disclosure could be helpful to users. So it's where what you're hearing from us, maybe on further consideration, there would be, and further argumentation, we would have a more consistent viewpoint one way or the other. But there is a split amongst our board members on this topic.
Tom, thank you for that. I think obviously recognise that. I think that that it sounds to me like this is a point where further information from the market, from interested stakeholders, is going to be critical, and almost certainly will be a focus of a discussion, further investigation, a discussion document, or the exposure draft, as the case may be. But certainly we recognise and take on board the points that have been made, including the two-tier point. And I think the point that's made about deletion and addition is important. Certainly, I think there was, if I may, as I read it, the people didn't object to people adding individual entities or categories as pies, firms doing that, but they were, and I understand why they're concerned about removing categories, particularly if local particularly if it's flies in the face or is incompatible with local regulation. I think that requires a little bit more thought to try and work out how we address that, because it's clear that there are certain circumstances where size might be over burdensome for a particular entity to be categorized as a pie. But that's the point we'll think further about in the light of the comments that have been made. And so thank you. Very briefly, if I may, Tom, I'll just lay out the way forward from here, which I think Jeff is at the end. So we have a board meeting in September, which will consider what's been your input and the further work of the task force. I think the plan is to use the November joint board session to discuss some of these issues, and then it will be considered at the December meeting. And whilst this is going on, research will be undertaken. We'll be considering some of the non-assurance comments which are relevant to this, and stakeholder meetings will take place. So continued coordination through to the December meeting, and then we'll work out how we take it forward from there. And I hope I've been suitably succinct in trying to get the last part of this through in acceptable time frame.
Well, thank you, Richard. You have, and thank you to all the IAASB partners that joined on this call. I think you got robust feedback, many of which is directly supportive of the approach. And so we look forward to further discussions with you on this topic. So thank you to that. And also special thanks to Josephine and Fiona for their participation in the task force discussions as well, which helped really get us to a point that we are today.
And thank you, if I may just add my thanks to everybody for their comments, which I thought were very logical and constructive, and will certainly help the task force as it moves forward. Thank you, Tom.
Thank you. Enjoy your meeting, which I know you have to jump off to right now.
Thank you. I'll do just that. Thanks.
Okay, so we're moving to the second topic. Thank you all for that important discussion. And I think it was really important that we gave them good feedback on it. So I think we're in better shape on that. The second topic today is about how we're responding to the feedback on the proposed conforming amendments of the QM standards that were presented at the covering explanation on the EDs, and to get your views about the proposed changes since the EDs. I know Brett is going to start this topic off and get some assistance throughout. So I'll turn it over to Brett. So Brett, conforming amendments.
Thanks, Tom, and thanks everyone for the time today. Particular thanks also to the QM task forces and staff that have been working very hard on this, and particularly Joy, who's taken the lead on most of this. So I'll give some introductory remarks. I'll turn to Joy in a moment just to highlight a few of the more detailed points about how we went about it. No slides. We thought we could probably get through this one pretty quickly, and only one question. So we won't do this in separate passes on each standard. We'll just ask for your comments just all in one go, if that's all right. As Tom was saying, the purpose of this is really just to update you on the conforming amendments from the standards, just so that we're all operating on the same pages. Obviously, the standards are still under revision right as we speak, and so we had to pick a point in time to start the process of preparing these conforming amendments. So that starting point is essentially the last draft that the board saw. So it's the March or April drafts, depending on exactly where in the standards you're looking. The changes that you'll see in the issues paper, there was a very long appendix which outlines all the changes. There was a couple of things highlighted in there. If it's highlighted in yellow, that's really what we're asking you to focus in on. That's the areas where we've spotted the need for changes from what was proposed in the ED. There are also changes highlighted in blue in the left-hand column. The reason why we've done that is because there are some decisions that the board made since the EDs were issued that affected what would have been in the ED if we had have had it at the time. So this is, to do with the approval of 315, the IAASB code conforming amendments that we pushed through. So we're not asking for comments on anything highlighted in blue. We just wanted you to see it so that you could see, the full range of changes that are going to be made to the extent standards. So the process that we've gone through is staff have prepared this. We circulated it to the task forces for comments. As always, there may be further comments, so we'd welcome those. A project like this, where we're really trying to deal with a lot of what sometimes are quite minor comments, we really do encourage and welcome any written comments anyone might have on the topic. It's often a quick and easy way to get through it, but by all means, we would appreciate more significant comments being highlighted on the call today. The one thing I do want to mention is just around the conforming amendments that we've proposed into ISA 600. And this is obviously a topic where there is an active project underway in this area. And so we're very conscious that we didn't want to go too far and anticipate, how the stakeholders might respond to the exposure draft in there. So we've deliberately tried to approach that in a very limited fashion, where we've made the necessary changes to make sure there's nothing in conflict, where there's enough material so that you can use 220 in line with extant 600. It was obviously a big focus of both the 220 and 600 task forces when they were working to make sure that we are in a position where the two can operate in concert. At the moment, the plan is that we will have some FAQs perhaps on the topic of just closing off some of the implementation questions that people might have while we're in this world where we have a revised 220 but not a revised 600. So you'll see those in due course, of course. Let me just pause there, and I'll just turn to Joy for a moment just to briefly explain the categories of changes. Thanks, Joy.
So obviously, because of the changes that were made to the underlying QM standards, there will be paragraph references and that sort of thing. Those ones are all category B. The main ones will result, if you remember back in June, we had sessions on resources and how those work between ISQM1 and ISA 220. So some of those flow through to some of the other ISAs. And there's a couple of examples. The ISA 220, there's a little bit of a heavy rewrite on that and some new references. Those sorts of things, those would be considered a category A because they required a little bit more thinking on staff's part, and they required more the QM task force members to take probably a closer look, although we did also get comments back on the paragraph referencing because, of course, those must be correct. There was one case where, just because of the timing of the IAASB code conforming changes, which were approved in the spring of this year, when they were layered on over the wording that was in the explanatory memo of the proposed conforming change, there was one case where it actually, the IAASB code change totally took away the need for a conforming change. So that we call the category C because it really fit in either of the other two. So, as you can see, if you scrolled through all of the right-hand column, the comments that are highlighted in blue, there were very few what we would call substantive changes to the standard. And then just one quick point, this table you won't see again after today. Once we've moved on from this, it will be only the right-hand column that would be presented in a series format, consistent with how it was presented in the explanatory memo. So it would just be a rolling list of all the conforming changes. And that's what we would then see in September. And it would reflect all of the additional changes that are made between now and September to the underlying QM standards.
Thanks, Joy. So just a couple of things. We have received also some offline comments already, and many thanks to the people that have provided those. Just two things I wanted to highlight in case it does cut across comments that other people are going to make. First of all, you will see in the draft there are some changes proposed to ISA 300. I appreciate that it was a little while ago, but we did actually cover these with the board back in December 2019. And there's a footnote in there, but just in case the footnote wasn't clear enough, we have actually discussed this in the past, but again, of course, happy to take any questions or comments on those. The other thing is there was a comment that was made just about the alignment of some of the paragraphs where in 220 it talked about it might have been the auditor, the engagement partner shall be satisfied, and it's now changed to shall be determined. There was a comment that some of these may not be fully in alignment at the moment, so we do need to go back and check those through. That's it in terms of all I wanted to say in terms of introductory remarks. So maybe if we just turn to the draft now and get comments. As I said, I'm quite happy to take comments, just, everything you've got on one thing. Again, if they're more minor comments, I think probably, Tom, with your permission, I'd suggest they could probably best be dealt with via written comments offline.
Thank you, Brett and Joy, for setting this up. Fiona.
Thank you. I've read the paper, conforming amendments. I've got no issues. Thank you.
Thanks, Fiona. Sue?
Hi, thanks for that. I've sent in a few comments offline. The main one, because it relates to a requirement I just wanted to raise, was in 300, paragraph 12 and C. It references any changes, although I think the lead-in talks about significance. So I've suggested we could maybe delete the any. I think it retains the description.
Thank you. Julie?
Same as Fiona. I've read the paper. I'm fine with it. Brett, we sent you a few offline comments, particularly on that point you raised on 220, but otherwise I'm good.
Thank you. Sashika?
Thank you. Same from me. I have read through the document and I have no comment. Thank you.
Fernando?
Thanks, Tom. No issues as well.
Thanks, Fernando. Rich?
So I had the same point raised earlier on paragraph 12, same exact point. Just to point that out. Another one, which might not be the most comfortable point, because I have to say our firm will be mea culpa on this too. But if we look at the responses, we have 3 responses out of 100 that have come in on the conforming amendments. And so you wonder, like I said, probably ourselves, that we overlooked responding to these comments because there wasn't a question on the information memorandum about do you agree with the conforming amendments? So I'm not sure there's much we can do other than try to address it in how we look at due process but it doesn't seem that we've received a lot of responses on the conforming amendments.
Okay, Todd Morgan.
Thank you. Also read the paper and no issues.
Isabel?
Yes, I've sent a comment on ISA 230. Now we have an inconsistency in the drafting between ISA 230 and ISQM 1 on the deadline for assembly of the file and on the retention period for the file. Initially, we had in ISQC 1 a sentence using the word ordinarily, And we had exactly the same in ISA 230. So it was almost a requirement. And now, at least based on the last version of ISQM1 that we were provided in March, ISA 230 still has this ordinarily structure, while in ISQM1, it's presented as an example. So I don't know if it's an inconsistency or if we did it on purpose. At least I cannot remember. Thank you.
Thank you. Kayue?
Thanks, Tom. We also have a minor comment to ISA 300 paragraph 12. It refers to the word significant without the insertion of the word significant prior to changes after the words, including any. All changes to the nature, timing, and extent of plan, direction, and supervision of engagement team's member and the review of their work would be regarded as significant changes made to the audit plan. I will send this comment also offline to Joy. Thanks.
Thank you, Kai. Roger?
Thanks, Tom. We've sent in our editorial comments. There is nothing there significant that we need to raise for the consideration of the board. We're happy. Thank you.
Thank you, Roger. I think that was the last in the hand, so maybe one or two things for you to respond to, Brett and Joy.
Thanks, Tom. Joy, maybe I'll start off and then I'll turn to you if you have anything additional to add. So a couple of things. First of all, the 300 paragraph 12C, we can have a look at that one. I do see how it could be read as being a different level and perhaps a burdensome, even if there was a minor change in the way the direction, supervision, and review was going to be conducted. I can imagine with there being changes in the way it's conducted that would be a significant change and would create some additional issues that would have to be dealt with, and you'd want to see documentation on those, but probably not everything. So that we'll bring that one up with the task forces. Just a couple of other things. So the 230 comment, Isabel, that you had on the use of ordinarily, we'll bring that up with the QM1 task force. I'd be a bit reluctant to change it in 230. That's a very long-standing paragraph in the application material, and it is a fairly important one. But we can have a chat and see whether there's a way that we can bring those better into alignment. Last point, Rich, just your question on the conforming amendments. It's actually pretty normal that we don't get a whole lot of comments on the conforming amendments. We usually would get perhaps a few more than this one. I do wonder a little bit if the process of releasing 3 exposure drafts at the same time may have inhibited people just because it was a heavy burden, and I suspect that the changes weren't particularly significant, and perhaps because of that, people weren't quite as engaged as they are. In terms of the question you mentioned about, is there something else we need to do in terms of process? There was a section in the explanatory memorandum that explained that this is where the conforming amendments were, and so there was obviously some pretty clear references to that. If people wish that they had have sent us an email, or sorry, a letter on the topic, I'd be more than happy to take them even at this late stage. I just don't feel that there was a whole lot in there that's going to create any particular issues. So perhaps something informal would be appropriate if there is something that you think you wished you had have said back a year and a bit ago. I think that's all I wanted to say. Joy, can I just turn to you briefly if there's anything you wanted to add? Okay. All right, Tom, then I think we're done from our side.
Great. Anything else anyone want to raise? Billy, anything you want to raise, make the board aware of, coming attractions for the board before we close the meeting?
Tom, yes, thank you. You would see that Bev has joined us on video. So I think Bev just wants to give the board a quick preview in terms of the next board call we have on August 11 and what board members can expect to receive when we send out the material for that. So Bev, I'm going to turn over to you.
Thanks very much. I think, as some may or may not know, we have started our work on our projects on fraud and going concern. We're currently in the information gathering stage so that we can see how to scope the new projects. So we've moved into the new framework. So in undertaking the information gathering, there's certain aspects of the work that we've been doing that we sort of think we understand enough, but then there's other aspects that we think we probably need to do a little bit more work on to really understand what the issues are. So with respect to one of these aspects where we may need some more information, we are looking at publishing a discussion paper. It will be a short discussion paper, and it's only focused on one aspect that we're looking at, and that is with regard to the expectation gap for both going concern and for fraud. We are doing other work on some of the other aspects that we think we need to do more. We're going to have a series of roundtables. We will explain a little bit more about sort of what we've been picking up and what these roundtables will address, etc., on the board call. But I just wanted to give a heads up before you receive the draft discussion paper that it is focusing only on one aspect. So things like technology, LCEs, where we need to do some more work, they're not covered by this discussion paper. So when we send out the paper, there will be a cover note with it, and we will explain it again, but just so that you know what to expect when you receive the DP in a couple of weeks. Thanks very much.
Any questions or comments from Bev? We just wanted to give you some context before you start seeing documents. No, none. Okay, well that's great. Thank you, Bev. We know we're making big progress on that project, which happens to be they happen to be two major public interest projects, which then leads me to asking Karen if there's any observation she would like to give before we close the call.
Thanks very much, Tom. I thought this was a really robust discussion on public interest issues, and I thank everyone for
Cutting in and out, Karen. Come back to you, Karen. Jim, I don't know if you're on the call, whether you want to.
Yes, I'm here, and just a couple of comments. One is with respect to the PIEs. I do think, and I probably should have said this while they were presenting, they do need to consider some of the public sector considerations, because I think that it's easy to overlook that aspect. So that's my primary comment. The other secondary comment was I'm more supportive of the broad definition as they are. Thanks.
Thank you, Jim. Karen, I did not mean to stop you from commenting, but you were breaking it in and out. Maybe the connection's a little bit better.
Yeah, I hope it is. I don't have any comments.
Yeah.
Make it easy. Thanks.
You did. We got the basically is that you appreciate, as I assume, in your PIOB public issues, David, that you're strong urging for us to continue to make progress on the public interest entity project. So you clearly see that we're committed to that.
Yes, thank you. And I think we'll also see the PIOB is very excited about your moving forward on fraud and going concern. Thank you.
Good. That's great. Thank you for the staff for making so much progress on those two topics so such a short period of time under the circumstances. Okay, I think we're to the end of the meeting, 16 minutes early, which is great, but we got everything accomplished, I think. The minutes for this session and for the June board meeting sessions will be distributed in due course for your review. If you've forgotten, we have a number of board meetings in September, and they're big ones. And as you know, we're spread out from September 14th to September 23rd. For more information. Oh, Eric, you wanted to come in?
Sorry, Tom. I just wanted to ask Bev for just clarification on the expectation gap discussion paper and the round tables. Have you got any sense of the timing of those, just so that we can start planning at a national standard setter level?
Sure. Yes. So so obviously the discussion paper will come to the board call on the 11th of August, and we're aiming to get that out around the end of August, beginning of September. The roundtables will then commence on the 2nd of September, where we're having the first roundtable will focus on fraud, but the technology aspects of fraud. We then have a roundtable on the 28th of September, which will focus or use this discussion paper as context. And we then have a roundtable on the 7th of October, which will cover the LCE aspects of fraud. So that will sort of be jointly done between the two projects of LCEs and the fraud work that we're doing at the moment. Perhaps it might be easiest if I just send this out in an email to the board, just so that you've got the dates. We're just working out at the moment, well, we're working on the participant lists at the moment. What we are just working out is how we can have observers in looking or being able to observe the meetings. And I will come back with some more information about that as well. Thank you.
Thanks.
Okay, thank you, Bev. I'll bring it to a close. As again, reminder that if you want more information about our upcoming meetings, obviously look at the IAASB's website or our Twitter feed, our LinkedIn feed, and for board members, keep drawing traffic to those feeds as well too, because they're the best way to get information on our activities. So with that, I close. I wish everyone a good rest of their day or end of the day, if that's where they are, or for those in the middle of it, enjoy the afternoon. Thank you. I'll speak to you shortly.
Thank you. Bye-bye.